Most of our deals are going to be 506B, which means you do not have to be an accredited investor. And part of that is because our goal is to help people become accredited investors. So if you're not accredited, you can't get into all these great deals. Then how do you ever become accredited? So we try to keep open for that. Typically, I'd say that our average deal has a $50,000 minimum. We have had some that do $25,000 from time to time. We are looking into creating a fund or possibly a couple funds. So that could be an option. Of course, you yourself still could even create your own fund or somehow pull money with other people that yourselves and form your own LLC and come in that way. But that is something that we're looking into. We want to make it as feasible as possible with people.
Welcome to the Share the Wealth Show, where minority professionals can learn to escape the racial wealth gap and catapult themselves into abundance. Your host, Nicole Pendergrass, grew her net worth from being negative to multiple six figures. Join her on her investigative mission to expose secret strategies of the wealthy so we can all have the tools needed to build the life and legacy we were created to possess. Now it's time for the show.
Hey guys, so we're back again. This is the second part of the episode with today's guest. I need you, if you have not heard part one, go back to the previous episode and listen to that first, and then come back and join us here today. But you're not going to want to miss what they already said, because then you'll be lost with what they're about to say. But in any case, you don't want to miss you need to hear the whole conversation. This is why we split into two parts. There's so many nuggets. It's so juicy. Go back and listen to the first part.
Yeah. Okay. You know what? So what about, I'm trying to get to the rest of how you even got to that position. From 5 years is not a long time. Like right. It seems like a long time now looking forward, but looking back, 5 years goes by so quickly. And for you to go from debt, struggling almost paycheck to paycheck kind of thing, like just paying the minimums on your debt payments so that you wouldn't have bad credit and just all that kind of stuff, to now being financially stable and blessed enough to help your family and to be able to say no to people because you're actually, trying to protect your future wealth. But without going into a lot of like every step by step, how is it that were able to do that? Like, I know you got into commercial real estate. What have you invested in that gave you that cash flow? And what are you doing now? Because we see the big Happy Camper Capital sign behind you. For the people who are watching, the people listening, there is a big Happy Camper Capital sign behind Don right now. So what were you investing in that changed that financial cash flow to give you the position that you're in now? And what are you doing with Happy Camper Capital? That's a tongue twister, to help other people and help people get into a diversified investment.
It definitely was not the trajectory that I planned when I first started. It's some of it. I want to say maybe possibly because of luck, but it was, I think, things that will just come naturally in place as you yourself start becoming more actively involved in real estate. You go into meetup events, you listen to these podcasts and webinars, and you start going to networking events, either online or in person. You start connecting with people. That I think that more than anything is what really led me to where I'm at today. Is just making those connections. I was definitely very much an anti-social person. Even having a conversation like this for me would have been very, very hard to do. Even just a couple of years ago, really. I'm the type that keeps to myself, really. Having conversations is not easy for me. I'm an introvert for sure, but I discovered as I started to learn more and talk about real estate, is I was like, okay, I actually enjoy talking about real estate investing with people. So even though I could not carry a conversation with somebody about politics or whatever general things are out there, I can talk about real estate all day. So I found that's my thing. And, I go to these meetup events and get to know people. And even early on, before I was even active on social media, I did not have a Facebook account at all until just, 6 months ago. I was not active on LinkedIn. The only place you could find me anywhere really was on BiggerPockets. I'd be active on the forums there and answering questions and asking questions and answering questions, I guess. But as I was listening to those podcast shows, like on BiggerPockets and other shows I listened to, usually at the end, I'm sure you'll do it too. You always ask the host always asks you how can people contact you, or whatever. So I would follow up with that, and I would contact the people. I'd say, hey, I heard you on this show, whatever. I liked what you talked about, this or that. I'd like to learn more. Most of the time, the people would respond back, and I would be able to get on a call with them and ask more questions, or they'd even offer help on different things. And I started connecting with some local people, in my area that were, again, much further than I was with rental properties. So I'd meet up with them and talk about, where I was wanting to get and where I was at and things I could do. So all these things kind of just slowly over time started building up. I'd make these connections with other wholesalers or real estate agents and brokers in different states and areas I was looking to invest in. And so I started getting these mailing lists. People would send me properties and things. And so over time, after I got that first one here in Idaho, it took about almost a year and a half or so before I bought another one, which was bought 2 more fourplexes in Arkansas. After that, it kind of led to the commercial stuff kind of came from that, really. So the agent I used in Arkansas, it's a few months after we closed those fourplexes, told me about an opportunity to purchase some land that could be flipped, at a decent amount. But it had to be purchased in cash, had to be, within a certain time frame. And I was like, I could not do that myself for sure. But because of those connections I made ahead of time, I had somebody out there that was local to that area. So I sent him a message. Of course, I don't think I've never spoke with him before prior to this, but I got on his mailing list. And so, I sent him a message like, hey, I got this opportunity if you're interested, and so we got on a call, and he liked the idea, he liked it, and he had his connections with private lenders. So we were able to purchase that land using his connections. The plan then to flip and sell that property, a year later. Unfortunately, that year later was during COVID, so we didn't sell it at that point. We held on to it a little bit longer. We've got it for sale now, but we're actually now considering possibly building on it too. So, and then with that, I got into another piece of land with another partner. Again, I found people that had cash to bring to deals, because I still didn't have a lot of cash myself at this point. But I found people that had access to cash to bring to deals. So I got another piece of land under contract. Found another partner that could bring some cash that we had on that one, did specifically plan to build on it. So we bought this land. We're going to be building a commercial strip mall on there because of some previous connections, again, that I made through Bigger Pockets, like a couple of years before that. Another opportunity came up in my area. Some people actually contacted me about investing in a development project they were doing here in my area. I had turned them down a few years before on a different one because the returns weren't great enough. And now they came back to me, early of 2021 with a much better opportunity. I was like, that sounds really interesting, and I was not finding anything else out there that I liked. And so I looked into it. By this point, I'd already started networking with people like yourself, Nicole, and others that were, I consider much more advanced, commercial real estate investors and syndicators. And so I mentioned to these guys, like, hey, I'm networking with these other investors that I could probably help you guys raise capital for your projects if you'd like to let me, work with you guys. And so they thought about it for a while, and they agreed to let me kind of come on. And so the very next project that came up was a huge development project of 800 doors. And so I was like, man, first, so
I wasn't expecting that.
My first thing I got thrown into to help raise capital for was a giant development project in Idaho. So it was. So I'd never raised capital before. Of course, I'd found, capital partners. That was different. Finding partners for deals like a JV thing is different than finding investors to invest in your deals.
Yeah.
So I was still fairly new to that. And again, I was not active on social media yet, really. So nobody knew me. And this was a development project, which most people are kind of more fearful of development anyway. So it's kind of a hard thing to take on initially. But I was like, okay, I'm gonna give everything I can. I've got to. So I went in and. I did fairly well. I didn't do as good as I would hope for my first thing. I still did pretty good for bringing capital to that deal. So at least enough that I could, and additional to that, I guess, from my own personal insights, things I understood and knew that these guys didn't, because they were just developers. They weren't quite, investors. They would usually build and sell everything. And so with me in there, I kind of showed them, they'd be better off to build it and hold it, to build to rent kind of thing. So,
yeah.
So that's now the mentality of the next project we're going to be doing is going to be build to rent for that. Anyway, so that project actually is now well, I guess I can't say that, but we may be exiting that earlier than planned. At a very great return on that. All the investors in that deal were expected to basically double their money about 2 years. They may be getting that back sooner than expected, and schedule that into the next project, hopefully. So that was kind of
basically. I'm sorry, cut you off, but so you've networked your way through your real estate journey, really, like just being there, being bold enough to listen to a podcast and actually contact the person, which a lot of people don't. Right. You know, I've been on a few podcasts and I've left my phone number or contact information, and very few people actually, like there are people who reach out, but most people don't do that. You know what I mean? The podcast episodes get, so many listens, and a lot of people won't reach out to the guests. So the fact that you did that was great. And you just kind of slowly over time, without expecting anything, just networked with people to connect and ask questions, and you made connections, and then people brought you in on deals and things like that. So I think that's great. Like with Happy Camper Capital, we got a few minutes, but I really want to touch on that. Because I think that's such a niche type of investment strategy, especially coming from the multifamily world. So in like 2-3 minutes, can you tell us what that is about and the type of deals that you try to focus on so that more people can get into investing? Yeah, definitely. And you're right. It's a very unique niche that I actually enjoy a lot. The more I've learned about it, I love it. We purchase and syndicate RV campground resorts and marinas. So not multifamily, not self-storage or mobile home parks. People get confused with mobile home parks, not mobile home parks. These are RV campgrounds. So people come in there, basically it's like a short-term rental at a multifamily scale. So we got people coming and paying a good amount of money to stay for maybe a weekend or a week or a month or something, and then they leave and go home. There's no carpets to replace or appliances to fix. Generally no clogged toilets and stuff like that. So no major expenses like that. Of course, our biggest expense is going to be with more the staff and things, but people are coming there to have a good time and enjoy themselves. As an investor, of course, in our deals, you can physically go to one of these campgrounds and have fun, and hang out there with your friends and family, talk about investing in real estate and how this property is providing you a great return. Something you generally are not going to do with multifamily. You're not going to usually live in one of the apartments or have a barbecue in the parking lot. And so, it gives you a unique perspective as an investor. And going back to what I talked about before with my kids, I took my kids to clean the apartments with me. That probably more than anything left them a bad experience, I'd say. Looking back now, that when they grew up, they're like, why would I want to buy an apartment building if I got to clean it? That's going to suck, So, but now if we go to a campground, right, they're going to be creating fun memories that will say, yeah, investing is fun. We can actually go and hang out and do cool things, go boating or whatever, So it's a very different experience that you get as an investor. And in general, the returns on these properties is also part why I like this a lot. For people like myself, especially when you're starting out, you have limited funds to invest. You can't put, say, $100,000 in multiple deals. You only got maybe 25 to 50,000 you can scrape together for one deal. If you can only put your money into one deal, you'd probably want to get the best return you could possibly get for that money. You're not put it something where you're maybe going to, get a 50% return after 5 years, but you want something where you can maybe a 3x return, in that same period of time. And so that's generally what these campgrounds are providing, much higher returns than you're seeing in most other asset classes, especially right now. Most of our average deals, I'd say we target between a 15 and 20% cash on cash with about a 3x multiple generally over that 5-year hold period. So you can really provide the extra income you want now, plus the equity boost at the end. So you get the best of both, high income and, high equity return in just even just one of these deals. So it's a much quicker way to build up your income, your wealth at a faster rate than in other asset classes right now. Yeah. And I actually that's why I love when I heard you were in the Happy Camper Capital, and I went to a couple of the webinars, and my money didn't come in how I thought it was going to. So I didn't have the capital to invest, but I'm waiting for my capital to come in, and I'm going to save some to put into RV parks, because that the cash flow and the equity multiple is so much higher, like the returns. Like I'm still in my growth stage. I want more growth, and I want, I'm a little bit more risk tolerant. Like I'm not trying to preserve capital, I'm trying to grow the capital. So you got to be a little bit more aggressive. And so I think, and if you guys don't know, equity multiple just means like how many times you're multiplying your equity, like the capital that you brought in. So in multifamily, if you can double your money with the 2 equity multiple, that's 2 times what your money is. And so if you put in 50 and you walk away at the end of the hold period with 100, and that's seen as like a great investment. But you heard what Don just said. These typically, there's not a promise. This is not an investment opportunity, but they typically, you could triple your money instead of doubling it. And that's an average return. So it's just, you really have to, this is why education is so important, even knowing that these other type of investment opportunities exist. Now, oh my gosh, we got to get to the final questions, but I got one more question for you. Oh my goodness, we got to get out. But one more question. So I know that you said something about lower minimums. So the types of investments that your group is doing that allows for non-accredited investors mainly. And what if you don't even have 25? Have you ever thought of doing like a fund that people would come up with even smaller amounts? Like how would that look?
Yeah. So yes, you're correct in that most of our deals are going to be 506B, which means you do not have to be an accredited investor. And part of that is because our goal is to help people become accredited investors. So if you're not accredited, you can't get into all these great deals. Then how are you ever going to become accredited? So we try to keep open for that. Typically, I'd say that our average deal has a 50,000 minimum. We have had some that do 25,000 from time to time. We are looking into creating a fund or possibly a couple funds. So that could be an option. Of course, you yourself still could even create your own fund or somehow pull money with other people that yourselves and form your own LLC and come in that way. But that is something that we're looking into. We want to make it as feasible as possible with people. The other, outside of Happy Camper, the other development projects that I'm involved with, those large multifamily developments, those ones we typically do take. Well, I don't say typically, but we possibly can take less than even 25 on those. So if that's something that interests you as well, please contact me after. Of course, there's no income on those. You do get the big equity multiple at the end for being patient while it's being built and rented out and whatnot. But yeah, so typically with our deals, we're looking at about a 50,000 minimum on average. Again, sometimes it could be less. We are, as of right now, there's nothing to say yes, this or that, but we are exploring options of a fund to have that possibility. But as of right now, that we do not have one.
But I know you guys heard what he said. I won't let that slip by. He said, you could possibly start a fund and bring people into the deal. I call that an invitation. So if anybody listening is interested in these types of deals and you would like me to start a fund so that we can all band together and invest in an RV park with Happy Camper Capital, please reach out to me and let me know. It's a lot of work to set it up, but I am willing to do that. And if that's something that enough people want to do and we can get together and really come in with a large amount of capital and band together, let's get that done. I'm sure Don will be open to it.
Wait, don't go yet. Have you been looking for a way to get started in real estate investing, but you just don't know how? You need the Launchpad. It's brought to you by my company, Norvest Holdings. And the Launchpad is a free guide with a ton of resources I've compiled to help you invest into your first real estate syndication. It includes terminology, book resources, video explanations, all the information that you need. Don't know what a syndication is? I got you covered. How to find a good operator, how to even tell if a deal is good or not without having to know how to underwrite it all. It's all in there. The Launchpad is designed to help launch you into the next stage of your investing career and get you invested into your first multifamily syndication as a passive investor, meaning you can be a landlord and own a piece of a large apartment building, but still go about your day-to-day life without having to stop and learn every single detail about what's under the hood and how it all works. The link to the guide is in the show notes. Make sure you sign up today. Again, this is a free resource and guide. And if you have any questions at all, please feel free to reach out to me. Now let's finish up the show.
Last 3 questions. Okay. So, you are from Omaha, right? So
that's where I grew up. Yeah.
Yeah. You grew up from Omaha. So this kind of will, at least your hometown hero. I mean, I don't know if he's your hero, but you already know who I'm going to reference.
Yes.
Right?
Yeah.
So Warren Buffett said, diversification is protection against ignorance. I take that to mean that you basically, people diversify because they don't know what they're doing and they're protecting against their lack of knowledge, right? So that could be a good or bad thing. Because everybody touts that being diversified is safe and is good. What's your take on that statement?
Sure. Well, along with that, Warren Buffett always says to invest what you understand. So that's why he says he does not invest in crypto, because he doesn't understand it. And so part of that, like you said, it has to do with it's easy to get distracted and want to invest in different things because you hear a hype, like NFTs, crypto, whatever else. But if you put all of your, the whole thing of you putting all your eggs in one basket, if you put everything in there and that were to just collapse, didn't work out, then yeah, you're in a very bad situation. I think years back, those that may remember like the whole like the Enron fiasco or whatever, the people that had their entire life savings in Enron was wiped out overnight, so diversification is good for that reason. And then I think, not just in, traditionally when we think of diversification, you're thinking of stocks, having different types of, not just different companies, but different asset classes. You got agricultural or tech and, everything else in there. Obviously for me personally, I've looked at this more also in the realm of real estate. So you could be your asset class diversification. We're going back now to, you have your multifamily. Most people have everything you have is multifamily, and we may have saw, in the last couple of years when there was eviction moratoriums and things going on, people may not have been paying the rent. They may not have had your income coming like you expected. If you have some diversification in other things, they get your self-storage, RV campgrounds, different things that will add some diversification to that. And plus, I look at also as geographical diversification. I don't want everything I own all in Houston. If a major hurricane comes through and wipes out all of Houston, then everything I have is gone. So I want geographical diversification to protect against natural disasters, job losses, and different things that could go around. So that. Like for that, going back to your statement, I guess, most of us, we don't know what we don't know, so therefore we are all ignorant in different things. And so having some protection against what we don't know is always good, to not be left with nothing in the end.
Yeah. Okay. No, I definitely agree with your whole analysis of that. Great. Next question. Have you played Monopoly before?
Yes, of course.
Okay. Yeah. So Baltic, are the cheapest properties or the cheapest property, and Boardwalk is the most expensive. So in your strategy to win Monopoly, which property are you buying and why?
So if it's only between those two, so first of all, I'll say I tried to buy everything I can. But it's kind of funny. I did not know this ahead of time. I looked this up before this, but so apparently if you were to buy Baltic and get it fully built out, it's the second most valuable property on the board, like barely behind Boardwalk. So building, even though it's a cheap property to begin with, once you build it out, it's going to be a high income producing property. And so between those two, yeah, I would definitely take Baltic. You think of Boardwalk as being the big money maker of that, but the chances of people landing on that are probably less than the other ones. And so I'd say start off small, get Baltic, and build it up as quick as you can over time. Then, keep buying up more properties.
Yeah. You know what? That is a strategy. I love that question because it just gives me an insight into everybody's strategy and mindset of like how they're going to attack it is slightly different. And they all have good reasons, which just shows you that there's no one size fits all answer to wealth building, real estate investing, anything else that you're trying to do financially. Everyone is going to have their opinions as to why or why not something is a good or bad, answer or strategy. So you have to just really think about what works for you and for what you want to do. So I appreciate that answer. Last question. How can our listeners connect with you if they want to learn more about RV parks, just hear about your blog, or just talk about anything real estate related, since you love talking about real estate, like the rest of us. But yeah, how can people reach out to you?
Okay, well, you can obviously find me on LinkedIn. I'm definitely active there. I'm also on Facebook. You can find my blog is ctrfinance.com. Go to our website at happycampercapital.com. you can go to the I think it's the About Us tab there, and you'll see my profile there. And you can the bottom of that page, schedule time to talk with me. I'd be happy to get on a Zoom call with talk to people and kind of go over your where you're at, where you're looking to get for your goals, and how we can possibly help you get there.
Perfect. I love it. Thank you, Don. Gosh, you gave so much valuable insight, a lot of mindset gems and triggers for people to learn how to say no. Remember that one person, you got to tell one person no a day. That's the goal, right? Strengthen that muscle. But thank you so much for sharing your journey, for sharing how you're looking to give back, the opportunity that you're presenting to people, and how you're breaking from the mold and not just sticking to the multifamily because that's what you start with. You see the opportunity and you're going for that because that can help the people that you're really trying to impact. And you're trying to make non-accredited investors become accredited investors. And I love it. We have a lot of the same things in mind. I don't know what word I was looking for there, but in any case, thank you for joining us. Thank you for sharing with our audience, and thank you, listeners, for tuning in to yet another episode. And we will see you next time.
Okay, thank you.
Did you love this episode of Share the Wealth Show? Be sure to connect with Nicole by following her on LinkedIn, Instagram, or Facebook. If you picked up any of the gems that were dropped by today's guest, make sure you not only put them in your bag, but if you know of someone who would benefit from this information, don't keep it to yourself. Share the wealth and make sure to leave us a rating and review. We'll see you for next week's episode. Subscribe so you'll be notified.